All right, markets are off their highs. Not all that down, about 30 points here. Still up on the month. They were up during Christmas week. You know the drill. If this were to continue for the rest of the month, then you have a good January, you have a good rest of the year. So we're very, very close to that proverbial hat trick, which makes you wonder for a bull market that's approaching 9 years old, which would be the second longest on record, how long do you keep this going? Barron's puts together these roundtables with some of the schmutt maniacs of schmutt maniacs, hosted by geniuses like my next guest, the Barron's.com editor-at-large, Jack Otter, and others. Jack, now that's going on right now. We'll continue through the week and all. What is their thinking of this crowd that has been looking at a bull market that seems to know no slowdown?
It's fascinating. I love hearing from this group. And when, to your point, one point that was made earlier was that this is the 386th day without a 5% pullback in the market.
Wow.
So that is obviously extraordinarily unusual, and viewers should expect that it's going to happen one of these moments. And it could happen in this quarter, because as a result of the new tax laws, a lot of companies are going to be doing funky things with their finances to rearrange what they're doing. That could cause earnings results that look weird, even though they're actually not. So brace yourself for potentially a little volatility, especially when numbers first come out before analysts can dig deep into them.
5% at these levels would be 1,000 points of the Dow and then some. So a lot of people freak out about
exactly.
that.
Yeah.
But that could be 1,000 points spread out over days,
right,
weeks, et cetera. Is there sentiment that if it happens in the first quarter, it would be a buying opportunity, or what are they saying?
Well, it's funny. They weren't crazy about being pinned down on that particular point. The first person we asked quoted Buffett as saying that the reason you have market pundits predict the year in the S&P was to make fortune tellers look good. But they still talked about a lot of stuff that I found fascinating. One guy made the point that we haven't had a global synchronized recovery like this since the Eisenhower administration.
Wow.
So it's a huge wind in the sails of not only the U.S. market, but all markets around the world. And Jeffrey Gundlach said, if you threw a dart at a map and you hit the U.S., you got some of the worst returns last year. Wonderful year in the U.S. markets, and Brazil was up 40%, India was up. So they think that momentum is going. Nobody wants to be the one to stand up and say it's going to end tomorrow, right? There's no suggestion that it's going to end tomorrow.
Well, how much do they credit to your liking, Jack, President Trump and the tax cut, the aggressive hacking of regulations, all that?
So quick background on that. 2 years ago on this day, Jeffrey Gundlach told us that a guy named Donald Trump was going to win the primary and win the election. And most of us thought that was pretty crazy.
Right.
So now what does he say? He says he is happy with the animal spirits that have been created. Very few financial people are big fans of a lot of regulation and high taxes. He doesn't like the tax bill. He just feels that it was the most powerful lobbyists got their say, and it's kind of a jumble. And the way it favors some industries over others. But the general consensus is, yeah, you put a little more money back in the economy, you are going to see a little bit of a benefit in terms of GDP growth. The question is,
this corporate cut is pretty big.
It's massive.
And so it could have a lot of ancillary effects.
The question is, where does it go? Does it go to buybacks? Does it go to dividends? Does it go to salaries? And
a lot of it's going in the form of bonus checks to workers.
Right, exactly. And that's a very good thing. If you put more money in the pockets of the people who are going to spend it, obviously that is a big positive.
What about the view that the president's nuts, espoused in this Michael Wolff book?
Right.
There's nothing nuts about this market run-up. There's nothing nuts about the economic run-up. There's nothing nuts about what's happening in retail sales. So those are very real developments. Now, whether the president should take credit for that is, that's amongst game. But what are these experts saying?
Well, so first of all, you should be Trump's PR guy, obviously. He, instead of saying, I'm a stable genius, he should just, as you say, put it on the table and say, challenge this. We didn't really get into that a whole lot. Most of these people point out that there are many other lenses through. It's fun to talk about politics and politicians when thinking about the economy and the markets, but really, most of these things are driven by bigger forces. And the biggest one by far is technological disruption and the fact that these huge platforms, the Facebooks and Amazons and Googles, are driving so many things in the economy.
And will still drive them?
And will still drive them, absolutely.
So they're bullish through this year?
They are cautiously bullish. So, for instance, among the many phenomena, one could say rather than Trump driving the market, these platforms are driving Trump. Right? Because they have changed the economy so much that they have hurt factory workers. One guy pointed out that for what it costs you and me to open a store in a nice neighborhood, we could create a $100 million global company just by leveraging those platforms to sell stuff. We'd have 20 employees instead of how many? 100, 200 that we need, to run the other business. And what does that do? That's deflationary. It keeps wages down. It means those 20 people are going to get wealthy while the other 80 people won't have a job, and only people with good training gets jobs. So those forces contributed to the Trump victory.
And those forces still at play?
And they're still very much still at play. And we're waiting to see how it all shakes out. But don't bet against the big guys for now.
All right. Jack Otter, always good seeing my friend, the Barron's.com editor at large.